All right, so I figure we might as well get started here as people filter in. We can do the intro piece. So this is tri-state cannabis transactions. And we're going to be covering sort of what I like to call the intersection of cannabis regulatory law and corporate law. And I suppose, because we got some bankers with us, banking as well. And just, the business aspects of the industry. All right, so this is just an introduction. I'll go quickly here. This is Vicente LLP, our law firm. We're a national boutique law firm focused on the cannabis, hemp, and psychedelic industries. We've got offices throughout the country. For the purposes of this, we've got a New York office, a New Jersey office, and Michelle is not physically located in Connecticut, but she is a Nutmeg State native. And basically covers it remotely from Boston. And then obviously we've got sort of a lot of the other states covered as well. I guess I'm noticing now we didn't include Massachusetts in that list, but it should be there. So next slide, please. And we do, all the typical sort of corporate licensing work. This is I'm contractually obligated to hawk my book on every webinar. So please buy it for yourself, for your family. It's a great stocking stuffer. Give it a 5-star review. All profits go to charity to go to Last Prisoner Project. It's a little out of date now, but federal legalization hasn't occurred, so it's not too out of date. If you go to the next slide, we don't have it, but it covers your typical kind of issues around IP in cannabis, or raising capital in cannabis, or just how the licensing system works in general. So it's a great intro if you're getting involved in the industry, or if you want sort of a primer on the legal aspects of the industry. So I'll quickly introduce myself. I'm Charlie Alvacetti, a partner of Vicente Cedarberg, based currently in Massachusetts. I previously was in the Denver office. I also cover the New York office. You can see I pretend to be physically located in New York, but I'm remote. I run the corporate group, and I'm going to introduce Michelle next.
Which I think means I introduced myself. So hi, Michelle Bodian, also a partner here at Vicente. Like Charlie, a couple different physical locations, but formerly of the New York office, primarily cover New York and Connecticut regulatory and licensing, as well as co-chair our hemp and cannabinoid practice, as well as our chair our environmental health and safety practice. Kicking it to you, Jen.
Good afternoon, everyone. Jennifer Cabrera here, out of the New York office of Vicente. I've been with the firm for 3.5, almost 4 years now. So I'm based out of my home state of New Jersey and cover the New York and New Jersey markets exclusively. And that's it. Thanks for having me.
All right. So Michael Hutter, do you want to talk about next time, or I'll
Sure.
defer to you guys who wants to talk about it.
Sure. Hi, I'm Michael Huttner. I'm here in Boulder, Colorado, and I, along with my co-founder, Michael Mook, who's on this call, started Next Titan Capital. We literally launched just about a year ago right now. We are completely focused on the cannabis space. Specifically, we are up to our eyeballs on M&A work. So we represent both sellers of licensed operations, as well as a few buyers, and we have connections with lots of investors. And we are really, as an investment bank, what we're focused on is simply brokering. We're almost like a glorified matchmaker who connects sellers and buyers. Mook, on to you.
Great. Michael Mook, former Wall Street New Yorker who left New York, moved to Boulder, Colorado, got lucky to connect with Michael Huttner. We started our bank. We have a third partner in Miami, Jade Green. As Michael said, focused on M&A. And I also have interests in stores in Massachusetts and Maine, so I have experience there. So great.
All right, so we're going to start by talking about the state of the industry, which I'll just talk about pretty briefly and then turn it over to the next Titan team to give their kind of view on the financial state of the industry, just to understand the context in which we're dealing with this. So if we go to the next slide. So we look at the size. So, I mean, you've got kind of two things going on right now, in my view. One is that the industry grows geographically, right? You've got a bunch of new adult use states that weren't adult use in the past few years. I mean, in terms of what we're talking about here, right? Connecticut, New York, New Jersey are all have active adult use sales. That wasn't the case up until fairly recently. And then you've got a bunch of new states, right? So Maryland is the sort of bonus one we'll be talking about on the East Coast. But, Vermont is also new. And then, Bill's advancing in New Hampshire right now. I don't know if anything will happen there. And then, Rhode Island is another one. So you're seeing kind of cannabis come east. At the same time, though, right, as I'm sure everyone on this call is unfortunately aware of, that, we've run into a bunch of headwinds in the cannabis industry, where sales are down on a year-over-year basis. A lot of companies are in financial trouble. We've seen wholesale prices decline precipitously in some states, which have obviously negatively impact businesses. Prices at the register haven't necessarily been able to increase with inflation. So operators are sort of caught between increasing costs, because they got to pay more for electricity, but they can't necessarily raise their prices at the register. So, why is this happening? I mean, a bunch of different reasons, but you've got high taxes, high regulatory burdens, lax enforcement on the illicit market. That's sort of the California issue. Increasing operational and labor costs, investors pulling back on investments, and the fundraising environment is radically harder than it has been in recent years. So a lot of companies that sort of were counting on the ability to raise capital sort of on good terms and fairly easily in large amounts haven't been able to do that. And you've seen a number of companies get in trouble where their balance sheets have just gotten really weak and they just ran out of runway because they thought they'd be able to continue to raise and they haven't. And then you've seen a number of markets sort of on the East Coast. I mean, I'm really thinking about Massachusetts here, sort of hit maturity. And by maturity in the cannabis context, for me, it's the decline in wholesale pricing. And then you start seeing sales, stores cannibalize sales from other stores, particularly, in a state like Massachusetts, where you're bordering states that have just legalized. A lot of the border stores are sort of going to see declines because of that, we think. And turn over to next Titan.
Well, let's go back to the other slide. I mean, Charles, you touched on most of the headwinds, and I think we're seeing much of that. Just you take different states, Maryland, for example, where new regs are coming and you've got lots of sellers, but I don't think they've gotten in touch with what the prices should be. So I think one of the challenges out there is you've got sellers, same thing in Colorado, where people have expectations and the buying pool has become much smaller. As we all know, if you look at all the MSO public stocks, they've gotten hammered and then more hammered. Debt financing has gotten more expensive. People want more collateral. Obviously, inflation hasn't helped. So I guess the question people should be asking is what's it going to take to change the market? And I think to some extent, 23, based on our conversations, is people keeping their heads down, preserving capital. I think there'll be probably less M&A activity from large players, but when you have times like these and issues with markets, other people come out of the woodwork and are opportunistic, buying distressed assets. And unfortunately, you'll probably have some carnage in the water, and that will present opportunities. And finally, I mean, of course, we're probably one of the largest industries that's federally illegal, and the government has done nothing at all to help this business. So time will tell where it's going to go, but this year it's going to be, I think, a heads down and for a lot of businesses and focus on their growth of what they have. Michael, anything to add?
Yeah, I think that's right on.
Cool. All right. So we're going to go ahead to regulatory issues in cannabis here. So this is just, these are just, this is kind of my issue spotting guide, right? Which is what you need to think about for, we'll talk about broadly 3 types of deals: M&A deals, equity financings, and debt financings, right? So each of these have some nuances in the cannabis industry that you wouldn't see in other spaces, right? So M&A, the big one here is obviously that you need regulatory approval at the state level to close an M&A transaction. In most cases, sometimes you can provide notice after the fact, and often you need local approval as well. And it can depend on the structure of the deal whether you can do an asset deal or you can do an equity deal. So in the current context where you're talking about distressed transactions, it's important to think about what states you're in from a regulatory perspective, because you may not be able to do an asset deal. So for example, Pennsylvania, challenging to do a asset deal with the licensed transaction. You can do an asset deal. California, it's doable, but it's hard. Massachusetts, it's doable, but you got to check the local licenses because the locals might hassle about you. Whereas, Colorado, certainly back in the day in Colorado, almost every deal I worked on was an asset transaction. The value of the underlying license will depend on how many of these licenses there are. You can run into license cap issues, a particular issue in a state like Massachusetts where you get a 3 license cap limit. There sometimes are restrictions around the transfer, and this is a big issue in the tri-state area. Certain license types cannot be sold for a period of time. It's a big issue with these provisional licenses or conditional licenses in New York right now. You may be able to sell a piece of the license, but you can't sell 100% of it, right? Because they don't want you to turn around and flip it, which is what you're seeing in some other states, like in Illinois, for example. And then, social equity is a unique beast where, M&A ability might be restricted there because the license is supposed to be for a specific group of people. So they can't necessarily turn around and sell it to a third party. They may be able to do that eventually. Of course, like my policy recommendation here is that I don't think it necessarily is to the advantage of social equity licensees to not be able to sell their license, because that drastically decreases the value of the license. Okay, so the next one is equity. And just a real quick, each of these concerns is going to be different in each state. So these are just sort of the big ticket issues you should be thinking about, right? Equity financings, right? You may need state and local approval to raise capital, to raise equity capital. A lot of times it'll depend on the materiality threshold in the state. Some states, like a Massachusetts, for example, it's a 10% materiality threshold. So it'd be, if you're raising a round of equity, you're probably not going to have any shareholder above 10%. So it's easy to do. But then some other states, or in previous iterations of some states, there was no materiality threshold. So, you'd basically have to get everyone lined up and then get the whole group of people approved. You got to think about suitability and background check for investors. Think about this up front. You don't want to surprise an investor down the line. In terms of suitability, I would say historically, 99% of his suitability issues that I've seen have not been because someone is sort of a criminal or something like that. It's just that they don't want to provide sensitive information to a state cannabis regulator. So you want to talk to people up front about that. Pre-approval versus disclosure. Some states you can just disclose the change after the fact. Obviously, that makes it a lot easier to get a deal done. Non-licensed holding companies. This is referring to, setting up, say, an IP company and raising capital into it, or a real estate company, or combining that into one kind of holding company, and then having arrangements with the licensed company. The advantage here being that if you've got kind of a strict approval regimen, this can make it significantly easier to raise capital. But of course, there are complexities here, affiliate transaction stuff, tax issues as well. And then social equity, again, it can be a unique field because there are restrictions in terms of who can have control of these licenses, what percentage. So oftentimes you have to sort of hard cap the cap table and say, this individual or this group of individuals will always hold 51%, which means that everyone else sort of gets doubly diluted if you're issuing new capital. And then we'll talk about debt real quick and then turn over to the meat of our presentation, which is the state-based stuff. So debt financings, I would say that, maybe a year ago, you saw the rise of, a lot of debt financing in the industry. Rates have gone up. I mean, historically, we were seeing flat interest, interest rate loans in cannabis, but, it's kind of now you're starting to see floating interest rates because we're in a rising interest rate environment. Now loans, most states do not require pre-approval of loans, but that can be the case in some states. And then you got to think about when you have to disclose the loan. Are the lenders subject to a background check? Are there restrictions on loan collateral? And then from the lender perspective, even if you have no restrictions on loan collateral, you have to understand what's collateral in the true sense of the word, meaning that if they default, you can just take it, because you can have a lien on a license and the regulators might have a problem with the lien. But if you actually want to take the license or step into a control position, you do need regulatory approval. Limitations on covenants or amount of lender control. We saw Massachusetts recently just come out with some guidance on this, which is the most useful guidance I've seen a regulator put out on debt, basically, giving the green light on typical lender covenants. Insolvency is something to think about. Federal bankruptcy is not an issue. Does the state have a statute that permits receivers to step into a control position of a cannabis company, in short order? You'll see New York currently does not have this. We're trying to push for a receivership statute, but you do have it in Massachusetts, and the number of people have gone into receivership there. And then, what are the timelines and procedures for a change of ownership, right? Because if you're a lender and the company defaults and you don't want to go into receivership, to actually flip the switch and take control of the company is not something fast. You got to think about what's your timeline here for a change of control. So we're not going to directly answer all these questions for these states, but have these in your back of your mind as these are potential issues that you'll see in corporate transactions in the cannabis industry. And with that, I think we're talking Jersey. All right, Jen.
All right. Thank you very much. New Jersey is definitely a hopping market right now. It has had a medical program since 2010. It was actually legalized in the last days of the Corzine administration. And then Chris Christie promptly came in and sat on it and said, I hate weed, and wouldn't let it grow. So only a few operators were authorized to open up during that time, and they were all vertically integrated. When Governor Phil Murphy came into office in, I want to say 2017, he promptly worked with the legislature to expand the number of qualifying conditions and start a new RFA. So we now have 10 alternative treatment centers known as ATCs, which are all vertically integrated and have multiple locations. And we actually keep back to the other slide. Thank you. Yeah. And the medical program has grown substantially. So we have over 100,000 registered patients, though obviously at the state of over 8 million, that's not huge, but it's growing. There are 35 dispensaries open now for medical. Adult use legalized per referendum in late 2020, and implementing law was passed in early 2021, the CREAMM Act. New Jersey opened up applications for adult use in late 2021, and we're starting to see a few of those businesses open their doors. In addition to that, there are some medical operators, which are not vertically integrated, that are starting to open up, and they are allowed to serve both the medical and adult use markets. So it's right now very, like, if you are a patient or a consumer, you don't have so many options across the state, with 35 medical dispensaries, of which 22 are both adult use and medical. But that number is growing daily because we have had licensing open now for over a year, and the state is offering these licenses more or less as long as you hit all the criteria. The big challenge in New Jersey licensing is finding municipal support, finding a town that has licenses available and property. And it's a pretty densely populated, packed state. So we can move to the next slide now. Thank you. So we talked a little bit about this. The 12 vertically integrated ATCs have up to 3 retail locations. They're the only ones that can have multiple retail locations. In 2019, there was a medical RFA where they issued 4 new vertically integrated permits, 10 new cultivator permits, and 30 new dispensary permits. Those are all just starting to open their doors. The vast majority of them haven't opened their doors yet because it was held up by litigation for a year and a half, a little longer than that actually. And they, most of those licenses were only approved a little over a year ago. So it's been a long process. Medical operators can apply to the regulators to become an expanded ATC, which basically means an alternative treatment center that can serve the adult use market. The CRC is not accepting medical applications at this time, though they are, of course, accepting adult use. So next slide, please. Adult use, so late 2021. The applications opened for cultivation, manufacturing, and testing labs. There is no cap on any of those licenses. There had been a cap for cultivation listed in the statute that has expired. Number one, it expired last month. But number two, it was more or less meaningless. So anytime you've heard about a cap for New Jersey cultivation, you can more or less disregard it. There will be as many cultivators as open their doors, manage to get through the licensing process, and survive in the market. Then in March of 2022, almost a year ago to the day, retail applications opened. There was a huge glut of applications in the first few months, and it's really tapered off at this point. You'll see in New Jersey a difference between conditional licenses and annual licenses. The key point there is that conditional licenses don't let you do anything. It's really just like pre-approval from the regulators, from the CRC. An annual license means that you actually can get operational. So there is a market in conditional licenses. We see a lot of groups trying to buy a conditional license and then take over control. But the key point there is that these are not operational entities that don't even have a final license. So that is factored into their valuation. And those, of course, are different from the medical licenses. There is, of course, also a market in the medical licenses, which are changing hands. We will see licensing in the next, probably sometime later this year, for wholesalers, distributors, which are basically the same thing, though they're treated as 2 different license types, and delivery. New Jersey will also allow consumption areas. It's allowed by statute and in draft regulations, but the timing for when that happens is unclear. It will be a type of retail license, though. So moving along to the what it's like to be investing in the New Jersey market. It's definitely possible to enter the New Jersey market. It's a pretty, in some ways, business-friendly regime, though with clear guardrails that you have to be aware of and steer clear of. So you can only be an owner of 1 license of a given type. So 1 cultivation, 1 manufacturing license, 1 retail license. You can have a vertically integrated business if you apply for each of those, though. It needs to be through the same business. You are not necessarily an owner if you just get a profits interest. That doesn't make you an owner. Also, if you are an owner of less than 5% of the business and you have no control or decision-making power, you are considered a passive investor, in which case those restrictions of 1 license per person do not apply to you. So what does this mean? It means that if I own 40% of a retail license, I can't have any other retail locations. That license gets me 1 location, end of story. If Michelle invests in my company and she gives me some money and she gets 4% of my retail license, she can invest in other retail companies because we have that materiality threshold, which is recognized and effective in New Jersey. The CRC respects it. Then we need to raise some money. Anyone who lends money to us is considered a financial source. Financial sources can work with up to 7 license holders. So there's no restriction based on tier or the type of license. They can just work with 7 of them. In addition, you can lend money to your own company. You can be both an owner and a financial source. So there are guardrails there that you need to be aware of. Then we have the concept in New Jersey of a management services contractor. It is spelled out very clearly in the regulations. A management services contractor can only work with 5 license holders. A management services contractor cannot own any equity in any license whatsoever. It's just, these are 2 different tracks that you can be on. There are also strict rules on what these MSAs can do. They can't have, they're limited in how their term, termination provisions, a number of things. So you have to be very careful on that. Finally, there's the concept of a vendor contractor. Lawyers are vendor contractors. HVAC contractors are vendor contractors. Landlords are vendor contractors. So anyone who is not a lender, pretty much, or an MSA provider is more than likely considered a vendor contractor. There's no limit on how many licenses you can work with when you're a vendor contractor. And there is no restriction on having an ownership interest in a license if you're a vendor contractor. There are restrictions on receiving an ownership interest as your compensation, but you could, I could have my dispensary in this hypothetical and still provide legal advice to Charlie's company, Charlie's license. So it is possible to work around these concepts. They are a bit fluid. Next slide. So diving in a little bit, can you have a 4.99 stake in more than 7 licenses? Yes, there's no limit on the number of licenses you can be a passive investor in, so long as you are under 5% and not exercising any control. So a financial source is a person or entity that's lending money to a cannabis license, applicant or license holder. You can have a secured interest in the company and the property, possibly in the license itself. It is not spelled out clearly, so one tends to assume that it is permitted, though it is not spelled out. A financial source can have financial source agreements with up to 7 licenses, as I discussed earlier. And the financial source agreement cannot give you an ownership interest. So you have a lot of one common structure that we see, and they'll come back to this actually. In New Jersey, for the first 2 years of operations, you can't change majority ownership of the company. So 51% of the company needs to remain static. Often you'll see financial sources or lenders coming in with convertible notes that allow them to get an ownership interest for now and then the right to purchase a majority interest later on. You have to be careful in structuring an agreement like that because the financial source agreement itself cannot give you the ownership interest. However, it can give you an option agreement or an option or warrants to buy equity in the future. So again, there are a lot of rules, but there are ways to work within them. So next slide, please. Management services contractors, just digging in a little more. There's really quite strict rules on what it is, on how you can operate when you're a management services contractor. And it's the classic, it's defined as the classic situation where you're providing administrative, financial, staffing, other operational services to the company. You can't, as a management contractor, you cannot get any equity interest in the license. It's just simply forbidden. And you can't even have an option to get equity in the license. You also are limited to working with 5 different entities. So we see often companies that are seeking to avoid being management services contractors. So there are ways to do it. Often it's done as a consulting agreement where you're trying to remain just a vendor contractor and so that you're not considered management services, because vendor contractors can actually have an ownership interest in the licenses they work with. Moving on. So as I mentioned earlier, oh, Charlie, am I running over on time?
Well, I would accelerate a little bit.
Okay, this is I think my last slide. So for the first 2 years of operations, 51% of the company cannot change hands. That needs to remain static. So that is a key point. And because so many of the licenses in New Jersey are received priority review from the CRC by being set up as minority-owned businesses or woman-owned businesses, there are additional restrictions that require that minority or woman retain day-to-day control. So that's an important thing to keep in mind. I'd say that's the last thing that I really need to hit on before we can move on. Thanks so much.
All right, Michelle, Connecticut. And I should mention, next time, guys, please feel free to hop in with any kind of thoughts on these markets from a business perspective. I don't know if you have anything quick to say about Jersey.
I mean, very quick. First of all, Jennifer, that was absolutely awesome. Your presentation on New Jersey. I'd say the only thing we're seeing is that controlling real estate is really a huge challenge right now. So beyond all the legal issues, and there are many and many challenges there, finding a property and getting, I'll call it the host agreement or the town agreement, that is the challenge right now that people are seeing. And so, and I think it will continue to be this year. So that's the only thing I would say.
Cool.
Great.
All right, Michelle.
Yeah, I'll do a speed version of this to leave time for New York, because I think that's the most complicated and the most fluid right now. So let's try to get through Connecticut in maybe 5 minutes. A lot more obviously could say, but you have to come in for later webinars for that. So Connecticut overview, medical since 2012, first dispensary opening in 2016. There were 4 medical producers, 18 medical dispensaries, adult use coming up on its 2nd year anniversary. New York, New Jersey, Connecticut all legalizing around the same time. Right now, there's currently 12 stores open that are selling medical and adult use products. We do have the first solely adult use store opened up, the number 12 there. All the others were conversions from the medical market. Next slide. Just briefly, medical program, just pointing out no real restrictions. I mean, there were a few, but essentially you could own both a dispensary and a production, no limitation on being vertical. We did see a couple of these licenses change hands kind of right before adult use legalization did happen. None have changed hands in the past 2 years. Next slide. And then license types available. Connecticut ran their adult use program via lottery. Just within the past 3-4 months, closed out all of the winners. Everyone's been awarded their license. First lottery round, 56 licenses were given out. There also was a direct opportunity to apply for the large scale cultivation outside the lottery. That was a social equity lottery with a $3 million provisional license fee. And then these are all in various stages of being built out. Most have achieved provisional license. Connecticut doing a provisional and final license two-stage process to get licensed, which is relevant for some investments. Next slide. Okay, at the time you filled out your application, whether it was for a lottery application, a direct application for a cultivator, or there's also the third direct application opportunity for equity joint ventures or social equity partnership. That's a partnership between one of the existing medical operators and a social equity partners. Those were direct applications outside the lottery. At time you're applying, you need to identify and license backers. Backers themselves are individually licensed. These are individuals with direct or indirect financial interest in a cannabis establishment. You have the definitions there. Why this is notable in Connecticut, you're locked into your backers at the time you apply until you achieve final license. Final license essentially meaning commence operation, you're fully built out, your SOPs, you're ready to go. So no opportunity essentially to add any new backers onto the license. Next slide. So with that in mind, We are operating in Connecticut under laws, and policies and procedures don't have full regulations, although the law was 300 pages. So we have a lot of information there, and the policies and procedures essentially have the effect, first and effective regs. They're allowed to be in effect for 3 years. The thing about policies and procedures, no opportunity for public comment. They can get popped down, popped back up. You got 2 weeks notice till they're effective. We're on the 3rd edition of them, last updated in September. We've been hearing there's going to be a new edition coming soon. Nothing within the policies and procedures directly touch on any sort of investment opportunities. Right now, that's all deferring back to the law. On the law, we do have a limitation in terms of lottery ownership restrictions, and that's no more than 2 of the same type of license can be awarded to a backer or an establishment via lottery. And why it's notable and underlined via lottery is because if you are going out and looking to purchase 5 licenses that have achieved final license, that is perfectly fine. The only limitation right now is on lottery wins. The lottery's already closed, so this limitation's already worked itself out. But just notable, you can be vertically integrated. You can purchase multiple licenses as long as they've achieved final license to then be able to add a backer. Next slide. And then do want to flag that there is an Attorney General's notification for antitrust purposes. Any material change to the cannabis establishment does need to be submitted to the Attorney General's office, and you got to wait a 30-day hold for them to review. For review this, they don't yet have a process, don't yet have forms. I've heard of one that has gone in for Attorney General review. Otherwise, kind of big picture here in Connecticut, and curious to hear from the Michaels, if what they're seeing on the ground, but we haven't been hearing of a lot of, deals being done yet in Connecticut. The 2 provisions I highlighted on the last slide and this slide are all we have in statute. Everything else is silent, other than the no new backers. So, in terms of financing, debt opportunities, as long as you don't trigger that definition of backer, seemingly is all okay, but a lot in Connecticut right now is TBD and is being worked out kind of in real time as some of these people, some of these licenses are looking at how to get that influx of cash, especially the DIA cultivators who are looking to pay off that $3 million provisional fee. And I see Michael came off mute, so I'm going to invite him to share what he's seeing on the ground.
Michelle, I mean, you're right on point. There was a fury of activity when the licenses came out. I think the expectation was that money was going to be easy to raise, and to build a large, I'm talking more cultivation, which also comes with 2 retail. The expectation money was going to be easy to raise, but you need $15 million to build a decent sized facility out there, and you have to find the property. What I've seen is that there's just not been a lot of money raised. I think it's, Connecticut's a nice state. It's just not, a huge state. I mean, I'm from the area, so I appreciate it. There are some stores open, like in Stamford, Connecticut, they've gotten some retail open. There's a lack of supply. Prices are very high. So it's, as you kind of look at the different states, I'd say New Jersey is much further along and I'd argue more organized than the 3. Connecticut, clearly better than New York, and then we'll discuss New York, which is, as we all know, has been a shit show. So that's where Connecticut's at. And I don't envision, at the end, I don't think you'll see the number of grows that I don't think everyone will get financed. I think that's what's going to happen, or there'll be smaller grows, but I don't think you're going to see 20, 50,000 square foot grows going up, but that's just my opinion right now. We'll see what happens.
Yeah, and right now there isn't a concrete deadline by which they have to pay that $3 million. I imagine at some point, those that have already paid are getting a little anxious that others have more time to fundraise. So I imagine it's not going to be an open-ended opportunity forever. So we'll also see if that does come in with a hard deadline of when you have to have the money cash in hand, if that has a few people drop off. Want to make sure we leave time for questions. I know I have a few more slides, but I think given that we're saying Connecticut is kind of middle of the road and wait to see come back, I think let's kick it over to New York. If we can just, it was the last slide. Perfect. I'm psychic. There you go, Charlie.
Okay.
You can explain everything.
Yeah. Well,
So
I'm going to go pretty quickly on New York here, just because, again, everyone's going to get the slides after this. And And just to leave some time for discussion at the end. So yeah, medical, New York, a decent number of registered patients as of February 1st. It took a long time for New York to get off the ground. I mean, New York's had medical market for quite some time, though they didn't have chronic pain as a qualifying condition for a long time, which impeded the growth. So the MRTA passed in 2021. We just passed the 2-year anniversary here. There are 4 dispensaries open right now. We expect that they're going to be opening more, and they're issuing these licenses on a rolling basis. They doubled the number of card licenses they're going to issue, so we'll see more licenses pop up. But next slide. Yeah, so this is just medical. We can go through this, but the bottom line is the medical licenses, of which they're currently 10. They expanded it from 5, which was the original. They're vertically integrated on the medical side. And then under the MRTA, they have the potential to be vertically integrated on the adult use side after paying a conversion fee. And Michelle, what was the timeline on when? Do we know when that conversion availability will be possible?
Okay, you caught me answering a question in the chat. When the registered organization will be permitted to convert?
Yeah.
Right now in the draft regulations, it's 3 years from when the first adult use retail store opens. So that's
Right.
3
Okay,
years
yeah.
from this past December.
Yeah,
So
which is a big change from
2026.
which is a big change from when the MRT was published. People thought that these ROs with the conversion ability would have a massive advantage in terms of their margins by being vertically integrated. So I think that was the purpose of the delayed ability. Okay, so next slide. Adult use. Yeah, so everything is conditional right now on the adult use side, and there are, the processors and the growers or cultivation are restricted to people that were hemp licensees, either growers or hemp processors, and the card applicants, which is the dispensary applicant, is restricted to, and by restricted I mean 51% of it needs to be owned by it. It needs to be controlled by a group that had a cannabis conviction in the state of New York. So it would also pick up your immediate family. There are additional licenses. So, the ones we haven't really seen yet are, distribution, and micro business. So these other ones, but we won't get into that. I mean, because this is going to come. It's all rolling out right now, and there's no local license, which is a big difference from New Jersey. And the whole program is very much set up with an emphasis on social equity. They're meant to. There's multiple definitions of social equity because the card applicant is a narrower definition than the definition under the bill itself. And the idea is to have the majority of the licenses be issued to social equity applicants. Next slide. All right, so here's just the status of the regs, so everyone understands. The medical regs are final now. The card regs are final, but they will be superseded by the adult use regulations. The adult use regs, which are currently in draft form, say that if they conflict with the card regs, the adult use regs prevail. We've got a draft adult use regulations. Tons of comments have been submitted. We're waiting for the next draft. And then there's also a bunch of FAQs on the OCM's website. Yeah, so the big thing here is they've got a tiered system, sort of like an alcohol model, where you've got a supply, which is, your basically your growers, your processors, your retail, and you can't be in both. Now, a supply tier person will be allowed to have a distributor license, but they can only distribute their own products. So you can't operate sort of a wholesaler in addition to a grow processing business. And then the big thing from a corporate perspective here is that you cannot have cross-tier ownership right now, which is a major issue, right? From a perspective in terms of if you're trying to raise money, you got to make sure or your investors are not in an incorrect tier, which creates an issue. And then the other factor under but bear in mind, this is under the currently draft rules, which is very unique, is that a true party of interest, which is an owner, it's a little bit broader than owner, but there's no materiality threshold right now. A true party of interest in a retailer can't have a direct or indirect interest in a non-retailer licensee outside of New York State. So if you're going to invest in a store in New York, you can't own anything in a grow or a processor outside of New York State. You could see why this really limits the pool of potential investors, because, you know, if you've any public stock, you own a grow outside of New York State because all the public companies are vertically integrated. There's a materiality threshold for lab licensees, which is 10%, but there's no material threshold here currently. Now, some of our comments requested this materiality threshold. I think it would really help the system, and it would help social equity licensees raise capital, but it's not in the draft regs. Next slide. And I'm gonna go quickly here. So this is just the true party of interest definition, which is the other major thing here for deals, is that any type of ownership makes you a true party of interest. And then there's this concept of sort of threshold, which is that if you're getting 10% of the revenue, or is it, yeah. So if you're getting a certain percentage of the revenue or profit, or if you're getting over $100,000 through an agreement with the licensee, that can make you a TPI. There's a lot of nuance here. And again, these rules are draft regs. So I don't want to definitively say, hey, this is going to make you a TPI in New York. But any sort of arrangement, you know, I talked about the sort of the non-licensed holding company. That's going to be very difficult to do in New York, because if you're doing a licensing deal, you know, if you're providing consulting services, you know, even a really under the draft rules, even a lawyer or an accountant could be considered a TPI. A loan where there's over $100,000 in interest payments could also be considered a TPI. So these are kind of the key things that we're looking out for here as we get to final regs and as we get guidance from the OCM. Yeah, so in addition to the tier ownership, and again, just think about this, you know, New York really wants to benefit social equity. So their idea here is that we're going to prevent vertical integration. We're going to prevent consolidation to give the smaller players a chance, which I think is great. I would just, my message to the OCM, if they care what I think at all, if they're listening, is that the prohibition on concentration is great for social equity licensees, but you have to make it possible for them to raise money, which this current system is going to make quite difficult. But yeah, this is the horizontal prohibitions, right? So you can only have 3 retail stores. You can in a card licensee, if you're below 20%, that limitation doesn't kick into effect. But there are license caps as well. So next slide. Yeah, so these, we're not going to get into this here, but they're exempt and non-exempt. And this gets into what's considered a TPI. But we can drill down on this once we get final regs. Next slide. Yeah, so again, card licensees, so the grow and processing can't change the 51% while it's conditional. The card licenses, which is unusual, any debt change requires OCM approval, which is pretty unique. This is a pre-approval debt situation, which is quite unique in the cannabis world. Options are really only addressed in the FAQs. The options are somewhat mentioned in the card licenses, though it's unclear how much that will change with the final adult use regs. Next slide. Try to finish up here. Debt, you see, can't do debt for card. Not really clear what this restriction on licenses being pledged means, because you typically don't pledge a license. You pledge the equity of the holding company at the top that owns the license, but you would never pledge the license itself. You would provide it as collateral, and you would never deposit it. It would just be take a lien. So, and then bonus state, Maryland, surprise. I'll let Michael Hutner talk about it, but everyone's very excited about Maryland, so we just want to mention it.
Sure. So Maryland, right now, right now you have a limit in Maryland of owning just a single cultivation a single manufacturing, and you can have up to 4 stores. Now that Maryland has passed adult use, which will go into effect, I believe, July 1st, there's a proposed regulation that people have heard that's going on right now that would limit the number of stores to any single owner to 2 stores. And there's a question of whether the MSOs and others that already have more than 2 stores, whether they're going to be grandfathered in or really limited to just 2. Because of that, there are a number of stores that are looking to make a move to get ahead of this regulation, which is going to have to move fairly quickly. I'll just mention we do have if there's people interested in acquiring a store, we do have a few that are opportunities. But again, these need to move quickly because we don't know whether whether these requirements will go in as proposed, which could limit folks to 2 stores total. Mook, do you want to add anything?
No, that's good, Michael.
And I'll just point out that you've got legislation that's pending in Maryland. So depending on what legislation passes and once it's enacted, that will have a pretty big impact on the industry. But we're expecting 2 rounds of licensing, with the first one being for social equity applicants. All right. Okay, so let's look at the questions, and hopefully I saw someone. OCM announced yesterday they plan to release recreational regs in May. Does that sound right? Michelle, is that right?
Yeah, that we're hearing the same thing. So we have the first round of draft regs, and they closed for public comment on February 13th. And so OCM has said it'll probably take them at least 60 days to review those regulations, review all the public comments. And then they said they do anticipate coming back out with a revised draft in early May. And then, those would have to come out first from OCM, then get approved by the Cannabis Control Board. And then those would go back out for at least another 45-day comment period. So all that's to say there's a lot of regs in flux, but we do expect to see, according to OCM's timeline, which could get thrown off by a couple of things, final adult use regulations early summer.
Yeah, and that's why I put that summary slide in here about the status of the regs, because I get confused about the regs in New York all the time. It's also worth noting that the card regs, they didn't accept any comments on. We're told that it's not going to be the case for the adult use regs, but it's an interesting fact.
Yeah, and then it looks like we have a question about whether a card, looks like someone does have a card license, so congrats on that, of being one of the first ones awarded in the Queens region. Would it conflict for them to own property upstate where they're considering to rent out as a cultivator or nursery? We'll say OCM has tried to answer as many scenarios as they can on their FAQ, and they actually do have a specific one on the card TPI guidance and FAQ from September that says, can a TPI, so a true party of interest, meaning an owner, and a card license be a landlord to other licenses? And the answer is, under no circumstances may a TPI in a card be a landlord to a cultivator, processor, distributor, nursery, microbusiness, registered organization, lab, or sampling permittee. So I will say that according to OCM is a hard no for those cross-tier prohibitions.
I would just say, and I wouldn't hold out much hope for this, but the final regs could potentially change.
Charlie being an optimist. Whoa.
Yeah, but I wouldn't take that bet. Because the final, this is what's confusing, right? You've got these FAQs on the website, but the final regs should override these FAQs. But yeah, no, the prohibition on vertical integration in New York is the strictest set of regulations that I've ever seen in the cannabis industry.
And then a couple of questions on the regs. Do we anticipate in May those are going to be final, or do we think they're going to go back out for a second round of public comment?
Well, haven't OCM said more or less that they expect to send it out for another round of public comment, or?
They've indicated they do plan to. So if they make any significant changes, more than a typo, a comma, switching out a name, anything like that, the open meeting law does require them to go back out for a second round of comments. So I think we're all, as an industry, hoping they're making enough changes, including definitions to TPI, materiality threshold, to force them to go back out for a second round of public comment.
Yeah, so we got a question in here. Is the state still accepting card applications, which someone answered in the chat, and just pointing out that they're right, that yeah, the application period has ended, but the additional tranche will be from the original applicants. We've been hearing about the state sending out RFIs to some of the original applicants. Part of the problem is that there's a stay right now on issuing licenses in certain regions in New York because of a lawsuit. But yeah, there's you're going to have to wait to the next licensing opportunity in New York.
And I think there's a couple questions for the Titan folks about what they're seeing, where if anywhere they're seeing M&A opportunities, and kind of national perspective, even if not in tri-state, is money changing hands or deals getting done?
I think it's slow. Interesting enough, in Colorado, we are seeing a bunch of deals. I think the feeling is that people that can make money in Colorado can do it anywhere. So, because it's so competitive. Maryland, Ohio, we have people interested in New Jersey. I'd say obviously a lot less in New York. People love to talk about New York, but we know the situation there. And even though it's not as it's not as desirable, California is actually an active market. Again, because there are so many stores, there are stores going out of business. There are delivery companies merging with other delivery companies. It's typical of any business that's under margin pressure. You're going to see consolidation. So that's what we're seeing.
And I guess another question's come in, given the large illicit market right now in New York, do you think if those stores are off the table and shut down, that might change any of the calculus in New York in terms of investment, or maybe are these rules more of the hindrance here?
With New York, I don't know. I mean, you guys all live there, or some of you live there, and I know I haven't been there recently, but we all know that on the street there are trucks selling, there are stores open. I mean, you're not going to be successful if there's lots of what we'll call black market or whatever you want to call it going on. So there's going to need to be a crackdown on that. Otherwise, it's I think retail stores are going to be disappointed there.
Yeah, I would just say, in New York, again, as a positive person now, I think you have to bifurcate. It may be difficult to run a retail store in Manhattan, but again, it might be different upstate. It might be different on Long Island. There may be regions of New York which are easier to succeed in as a operator than the city, assuming the current kind of enforcement priority stays in place, and these kind of unlicensed sellers are allowed to continue to operate freely.
Sorry, I think you're right. I mean, if I had my druthers, I'd say skip New York City and focus on the rest of the giant New York State, right? I mean, it's a big area, and go up to Saratoga, go up to the suburbs, find towns that are friendly about this.
Yeah, and I was gonna say some of these, talking to I've talked to people who've talked to law enforcement upstate, and there certainly are smaller regions or less populated regions of New York where the law enforcement is going to be pretty strict with respect to unlicensed sellers. So that's obviously, someone's just saying they didn't see a single illicit retailer when he was in Albany for a week. So that doesn't surprise me. So everyone, thanks so much for joining. I cut you off, Michelle.
Oh, no, say we got a question about Jersey. I was just going to throw it at John before we head out. I was just going to ask, someone is asking about the fact that there's local and state licensing in Jersey, if you've seen that impact the market at all.
Yes, hugely so. Happy to have a conversation offline, but local licensing is a big challenge in Jersey.
Okay, that was a good summary.
Yeah, it's interesting, right? Jersey is a state where it's limited, but it's difficult at both the state and local level, though it seems like it's less difficult at the state level than state
is very easy to work with in Jersey. It's all local. It's a matter of finding a town that has licenses still available, and a lot of those are gone because.
Okay, cool. Yeah, but I was going to contrast it to another state, but it sounds a lot like other states like a Massachusetts, right? Where,
Michigan.
it's very easy at the state level. It's the local level that can be challenging. And then when you're at the local level, it tends to be much more difficult for the retail because, you can locate a grow in a lot more locations than you can locate a retailer just because you're concerned about foot traffic and parking and that kind of stuff.
Absolutely. But
All right, well-
still lots of opportunity. So get in touch.
Yeah. Yeah, so there's tons of opportunities. In the short term, it's probably New Jersey and Connecticut, though I remain bullish on New York in the long term. So if these are all contact information, this will all be put online. Thanks everyone for joining. Thanks to the panelists for your insight, and have a fantastic Thursday, everyone.
Yeah, come back in a year when this webinar will be completely different. So see how it rolls out.